What's going on, guys? Your favorite mortgage lender, Abdel Kwame, got mortgages. Tariffs. Man, tariff uncertainty obviously has impacted home builders and retailers. We're going to go over our update from 421 this past week. A lot going on. We saw that the Fed chair actually came out, warned of a possible quote unquote challenging scenario on the horizon. Retail sales, just like I mentioned last time, in March saw a boost from consumers making purchases before tariffs obviously take effect. Then at the same time, home builders remain cautious. So a couple different pointing points that we're going to start off with. Right at the top, Fed Chair Jerome Powell obviously signals inflation is more important than labor. In his recent economic club Chicago, Fed Chair highlighted a potential conflict with the dual mandate for Fed. Right, we know employment and obviously inflation. He made it clear price stability and maximum employment are obviously critical. As inflation continues to rise, the Fed will typically maintain and monitor their rates to control that spending, right? Remember that when the Fed, as they adjust their interest rates, they're changing the federal funds rate. They are not changing interest rates, although they have a direct correlation. Bottom line, again, the Fed chair emphasized without price stability, we cannot achieve long periods of strong labor market stability, which is obviously what we're looking for. Now, retail sales obviously surged in March ahead of tariffs. We know that they jumped up 1.4% in March, obviously signaling a really quick uptick when it comes to a 0.2% gain when it comes to the Fed. The growth was widespread, 11 out of 13 retail categories showing significant improvement. We know the control group, obviously, aside from that volatility when it comes to oil, gasoline, building, posted a modest just 0.4% increase. Again, bottom line, guys, when we talk about obviously consumer spending, aside from retail sales impacting obviously overall health, March numbers exceeded forecasts. The surge may represent obviously purchasing that we did prior to knowing that tariffs were going to hit, showing a little bit of weakening future reports. Now, home building sentiment is a little down, right? Obviously, expectation is with a little bit of uncertainty when it comes to tariffs, but you'll see here home builder confidence did slightly tick up this month, 39 to 40. We're looking at deeper components again, buyer traffic, current sales, and sales expectations still remaining under 50. Now, housing starts did see a little bit of a decline. The one positive stuff is we've seen a 3.9% year-over-year completion and an uptick of 1.6% month over month when it comes to permits, with a 1.9% start, kind of showing a little bit of a push, right? Slightly beating expectations, right? And obviously really not materializing yet into construction starting. So again, March housing starts fell to a seasonally adjusted household of 1.32 million, little less than what it was usually at the average of the past 5 years of 1.8. When we talk about initial jobless claims, we monitor this weekly, right? Dropped just 9,000 to 215. Its lowest point since February, right? But again, new unemployment claims obviously subsided as we see within the recent weeks, and we take it from there. Now, again, expectations for us to look for: March new home sale reports obviously releases on Wednesday. Existing home sales drops on Thursday, and then we'll get the updates on durable goods for March and weekly jobless claims. Okay. So any questions that you guys have, please make sure you guys reach out to us and we'll take it from there. Have a great day.